Hello, everyone. Um, Today, I'm going to talk about story of my friend, and he called me a couple of days ago, and he got a shock of how much he paid in taxes this year. So he and his wife both are technology employees, and they get paid very handsomely. Each of them make 500 to $600,000 per year, so they make more than $1 million a year. And he was telling me that they paid approximately $400,000 in taxes, combined state and federal. Now he lives in California. So, there's approximately 10% tax he pays to California, about 30% tax federal. That makes out to be 40% of $1 million is $400,000. Right. So it's a huge, huge tax bill. And he was asking me, like, what should I do to save taxes? Right. So here's what I started with. Okay. I started with the usual lame stuff, right? Which is my point number one today. Have you maximized your conventional tax maximizing uh, uh, tools? For example, are you maximizing your 401k? If you don't need you don't have too many medical bills per year, you're young and healthy, your kids are young and healthy, are you using HSA instead of using normal insurance? Does your company have deferred compensation plans? Right. Um, if you have that, take benefit of that. Right. So, do you want to donate some money to somebody? Like make sure you donate enough amount of money. But besides that, I don't have a silver bullet. Okay. All the stuff about forming various trusts and all, and the real estate spouse thing, in my opinion, it's not for uh, middle-aged technology employees. It doesn't work with them. So I wouldn't even suggest them that thing. So once he said, yeah, he's doing all of that, and they both are really smart people. They're not going to leave anything obvious things out, right? So they were doing all of that stuff. So then I went to my second strategy, and my second strategy is like, do you have real estate in your portfolio? It's going to really help you with your taxes. And he gave me a smile. And his smile was, you're trying to fool me kind of smile, right? Because he immediately told me that my tax woman has told me that real estate is not going to help me much. It's whatever passive losses I'll generate from real estate, they will not affect my W 2 income. I said, you're absolutely right. She's absolutely right. That is a myth that real estate passive losses will reduce your W 2 income. It does not reduce your W 2 income. But what she's failing to tell you is that if you have more than one real estate, okay, if you have, listen to me carefully, if you have more than one real estate in your portfolio, that means you have a rental property somewhere and then you have a syndication investment somewhere, okay, or you have two rental properties or you have two syndication investments, they will help each other. How? So let's say you have property A and property B, and property A is generating certain depreciation and property B is also generating certain depreciation. Now, what happens is you sell property B. What IRS is going to do is it's going to put property A and B both in the same bucket. And all the capital gains of property B selling will be offset by depreciation of B as well as depreciation that you have accumulated from property A. The unused depreciation that you have accumulated from property A also applies to the sale of property B. This is very important to understand. What's important to us to understand is that the whole tax code tends to reward ownership more than the salary income. And what that means is if you have multiple properties, right? Um, if you own many assets, right? They kind of help each other, and they combine way reduce your tax bill. So they don't reduce your W-2 tax bill, right? But they will reduce your tax bill when these assets will get sold, because they'll get sold one by one. I'm assuming they're not sold at one shot, right? So this is something that you need to understand. The system increasingly favors the person who owns more assets. So even though they don't reduce your W-2 income, eventually what you need to do is you need to invest so much that your investment income grows, and that investment income is taxed at a capital gains rate that is lower than your ordinary income tax rate. This is very important. So real estate starts helping you once you have more than one property investment. Okay. Now, the third thing I told him is that just make sure when you get all these fat RSUs, right? Make sure you time its selling, right? First of all, don't sell, you can, if you sell after 1 year, then whatever the gain in that will be taxed at long-term capital gains. We want that, obviously, right? But in addition to that, you can time your sale for harvesting some tax losses. That means if you have some investments, stock investment that are not doing well, then you can sell them as well as sell these, and then they can offset each other's gain, right? So you need to really make sure that all of these things is timing properly, right? Yeah. And that's it. I mean, for really, really high income professionals, these are the three things they can do, right? So number one is they can just make sure that the usual list is all checked, which is 401k, HSA, all of that stuff. The second term is they need to have more than one real estate, right, in their portfolio, and they need to earn more income eventually, at least, from their investment instead of earning as a salary. And it's good for you in long term as well, because as AI takes your jobs at some point, right, it'll be good for you if you have all these investments, right? They'll save you. And a third thing is, if you're getting lots of RSUs, make sure you plan them. Like plan when you're selling them, and make sure you don't have too many RSUs of one company, right? And make sure you sell them at some point and diversify yourself. Yeah. So those are the three things high income earning professionals can do. That's it. Again, my name is Vaibhav Puranik, and this was the OMC Real Estate Podcast. Our website is oldmoneycapital.com, and our YouTube channel is Old Money Capital. Our Instagram handle is oldmoneycapital123. There is a button on our website, request a call. If you click on that button, you can arrange a call with us, and we can tell you how we can help you passively invest in multifamily or apartments. Thank you very much for listening.